Do you know why gold might be the most important investment you haven't made yet? In today's video, we're diving into Robert Kiyosaki's insights on why gold should be a part of your investment portfolio. We'll explore 3 burning questions. Why does Kiyosaki favor gold over other assets? What economic signs make gold a safe haven? And how can you start investing in gold today? In the realm of investment, few voices are as influential and distinct as Robert Kiyosaki's, the celebrated author of the financial bestseller Rich Dad, Poor Dad. Known for his contrarian and often provocative views on money and investing, Kiyosaki has consistently emphasized the power of financial knowledge and independence. Today, we delve into one of his cornerstone investment strategies, investing in gold, a commodity he regards not just as a metal, but as money. In exploring Kiyosaki's rationale behind gold investment, it is essential to first understand the framework of his investment philosophy. At its core, Kiyosaki's approach is about recognizing assets that don't diminish in value over time. Unlike paper currency, which can be subject to inflation and other economic factors, gold has maintained its value throughout millennia. Kiyosaki points out that while currencies and stock markets can crash, gold retains an intrinsic value that is universally recognized across global economies. Why does Robert Kiyosaki advocate for gold so passionately? According to him, it's all about security and safety. In his view, gold represents a safe haven during times of economic uncertainty. He argues that when stocks are tumbling and currencies are failing, gold stands as a bulwark against financial chaos. This perspective isn't just his alone, but is shared by many financial experts who see gold as a stabilizing force in investment portfolios. Moreover, Kiyosaki often discusses the historical importance of gold. From ancient empires to modern economies, gold has played a crucial role in commerce and has been a standard for wealth. By investing in gold, Kiyosaki believes that individuals are not merely buying a commodity, they are securing a part of history that has proven its worth beyond the fluctuations of financial markets. Understanding Kiyosaki's philosophical backbone gives us clearer insight into why he champions gold over other assets. But to fully appreciate his stance, we need to explore the specific economic indicators and scenarios that lead him to uphold gold as a fundamental component of any robust investment strategy. Kiyosaki's investment philosophy. At the heart of Robert Kiyosaki's investment philosophy is a simple but powerful principle: the distinction between assets and liabilities. For Kiyosaki, true financial wisdom lies not just in accumulating wealth, but in investing in assets that generate ongoing income or appreciate in value over time, thereby providing economic security regardless of market conditions. Robert Kiyosaki has often criticized traditional financial advice, particularly the typical reliance on savings and heavy investment in the stock market. He argues that true financial education involves understanding how money works and how it can work for you. Kiyosaki's teachings encourage moving beyond mere savings to investing in assets that do not lose value, but rather provide returns or retain intrinsic value, like gold. He famously divides assets into several categories, with precious metals like gold falling into the most favored category due to their enduring value and stability. Kiyosaki's approach to investment is heavily influenced by his broader economic outlook. He views the economy as cyclic and prone to bouts of inflation and deflation, times during which the value of paper money can erode significantly. Hence, his advocacy for gold stems from its historical performance as a hedge against inflation. When currencies lose their purchasing power, gold typically retains its value, making it a safer bet for preserving capital. Moreover, Kiyosaki's strategies involve preparing for potential financial crises. He often references historical events like the Great Depression and the more recent global financial crises to illustrate how quickly financial landscapes can change. Gold's reputation as a crisis commodity plays well into Kiyosaki's philosophy. It's seen as a protective tool that can safeguard one's financial health against systemic risks and economic downturns. With a clear understanding of why Kiyosaki emphasizes the importance of investing in assets like gold, let's delve deeper into the specific reasons he advocates for this particular metal. This will reveal not just the practicalities of gold investment, but also the strategic foresight behind Kiyosaki's endorsement. Why invest in gold? Robert Kiyosaki's advocacy for gold investment is underpinned by several compelling reasons that resonate with both seasoned investors and those new to the financial market. His approach is not just about wealth accumulation, but ensuring long-term financial security. Kiyosaki identifies several key factors that make gold an attractive investment. The primary reason is its ability to act as a hedge against inflation. As Kiyosaki explains, gold prices often rise when the cost of living increases. Unlike fiat currencies, which governments can print at will, gold supply is limited. It cannot be artificially produced. This scarcity, coupled with its enduring demand, ensures that gold remains valuable even when fiat currencies lose purchasing power. Kiyosaki points out that during periods of high inflation, gold becomes a critical asset in preserving wealth. Another reason Kiyosaki champions gold is its historical role as a store of value. Gold has been valued by civilizations for thousands of years, not just for its beauty, but as a form of money. This historical precedent supports its ongoing credibility and reliability as an investment. For Kiyosaki, investing in gold is akin to owning a piece of global heritage that has stood the test of time, outlasting currencies and financial systems that have come and gone. Kiyosaki also highlights the liquidity of gold. Unlike real estate or other tangible assets, gold can be easily bought and sold around the world. Its global acceptance means that it can be quickly liquidated in exchange for cash or traded for goods and services, which is particularly valuable in times of crisis when cash flow might be restricted. Finally, Kiyosaki appreciates gold for its diversification benefits. He often preaches the importance of diversifying one's investment portfolio to mitigate risks. Gold often moves inversely to stock markets and currencies, providing a balancing effect when other investments might be failing. This characteristic makes it an excellent tool for portfolio diversification, helping to stabilize investment returns over time. Understanding the strategic benefits of gold investment as outlined by Kiyosaki naturally leads to practical considerations. How can one start investing in gold? What are the best methods and what should be avoided? Let's explore Kiyosaki's advice on how to practically engage with gold as an investment medium. Getting started with gold investment. Venturing into gold investment can seem daunting for newcomers, but Robert Kiyosaki offers clear, actionable advice on how to start. His suggestions provide a roadmap that can accommodate both small-scale personal investors and those looking to make more significant placements. Robert Kiyosaki emphasizes the importance of starting with a clear understanding of the different ways to invest in gold. For beginners, he recommends starting small and scaling up as one becomes more comfortable with the market dynamics. One of the simplest methods is purchasing physical gold, such as coins and bullion. Kiyosaki points out that this method not only provides a tangible asset to hold, but also helps investors feel directly connected to their investment, enhancing their understanding of gold's value and stability. Kiyosaki also advocates for gold exchange-traded funds, ETFs, which allow investors to buy gold in the form of securities without having to store the physical metal. This option is ideal for those who wish to avoid the logistical challenges of storing and securing physical gold. ETFs are also a great choice for diversifying investment portfolios without the need for large upfront purchases of the metal. For the more adventurous or experienced investor, Kiyosaki discusses investing in gold mining stocks. This option links the investment to gold production companies, offering potentially higher returns, but with increased risk compared to physical gold or ETFs. Kiyosaki advises that this method requires a deeper understanding of the mining industry and the global economic factors that influence gold prices. Finally, Kiyosaki underscores the importance of due diligence and continued education in gold investing. He encourages investors to keep abreast of global economic trends, understand the factors that affect gold prices, and regularly review their investment strategy. According to Kiyosaki, the key to successful investment in gold, or any asset, is knowledge, vigilance, and adaptability. Now that we've covered how to begin investing in gold based on Robert Kiyosaki's insights, let's summarize the key points and wrap up our discussion. This will ensure that you have a clear takeaway into gold investment, providing a solid foundation to act upon. Investing in gold can provide financial security and stability, attributes that Kiyosaki values highly. Whether you're looking to hedge against inflation or diversify your investment portfolio, consider exploring the golden opportunities that Kiyosaki advocates. If you found this insight into Robert Kiyosaki's investment strategies helpful, don't forget to like, subscribe, and click the bell icon so you never miss our financial tips and tricks. Ready to turn your finances into gold? Start today.